As part of the training we're talking about, I wanted to cover all the different commercial property types we have, and there's a lot of them. So we're not going to cover everything, but I'm going to try to give you an idea of how we look at different commercial properties from the different niches and the subcategories and ways to basically understand the differences and the commonality between a lot of them. Generally, we can look at the major types are obviously retail, industrial, office, and multifamily. Those are the big guys. There are a lot of subtypes, there's a lot of little types, which we'll discuss, but these are the big guys. We can always look at a few certain aspects that are from across the board. We have construction type, we have usage, we have location, and then we'll talk about common characteristics, right? And then of course value. So let's get started with the most common one, the one everybody's talking about, multifamily. And when we look at the multifamily, the definition is everything that is residential, 5 units or more. So if you have a fiveplex, that's multifamily. But you'll hear a lot of people talk about multifamily in the context of duplex or triplex or even a fourplex. Those are still considered residential. You can get a conventional loan, like a 30-year fixed on a fourplex. But as soon as you step one up to 5+ units, it has to be a commercial loan. That's multifamily in our world, everything that is 5 units or bigger. Excuse me. When we look at the construction type, you have garden style. What is garden style? Garden style is the 2-3 stories that are more in a suburban environment. High rises, of course, and mid rises, these are more in the downtown, uptown kind of area. Single story, there's a lot of those that are just flat, single story properties. BTR, you'll see build to rent communities. This is a thing that is more common in the last, let's say, couple of years, where developer come in and they take a whole subdivision and build everything as rentals. So everything is little cookie cutters. It's not high customized. It's not granite countertops necessarily. It's not the high end stuff. It's built to rent. So they'll do certain choices in the construction process where they pick materials that are more durable, not as expensive, and so on. Single family portfolio are getting mixed into this. Don't think about the guy that has 3 or 4 single family and it calls it a portfolio. Think Purple Brick, think Redfin, think those really big organizations that bought hundreds and thousands of units. So if you have 800 single family units in a portfolio, that's commercial grade. And then we have mobile home parks. I put an asterisk next to it because it's like its own little animal, but it is technically multifamily. The big difference between that one and the rest of the multifamily is that in mobile home parks, you don't own the actual homes. You own the land, you own the infrastructure, you own the pads, the hookups, but you don't necessarily own the homes. So mobile home park owners also have the actual trailers that they own, but that's not part of the asset. This is just and just personal property basically on top of the asset. And then you can also look at multifamily, categorize it by usage. So conventional, student housing, senior, tax credit, these are all different usages. Now, like I mentioned, we'll review at the very end, we'll talk about the common characteristics that we can split properties, like, for example, size. So in multifamily, we'll talk about 50 doors or under, 75 or under, between 1 and 200 units, and so on. Size and other characteristics are also ways to split and categorize properties, but we'll talk about them a little bit, those little features in the end. Right now, this is multifamily. What sets multifamily apart from all the other commercial assets is the type of loans an owner or an investor can get. Like I said, as soon as you cross the line of 4 units, now you're in the world of commercial, and commercial loans come in all kinds, types, and shapes. We'll talk about the lending landscape in another opportunity. But the one thing to understand is most commercial loans are going to be either 20 or 25-year amortization. But when it's multifamily, there are government backed agencies, Fannie Mae, Freddie Mac, Ginnie Mae, that are specifically designed to give loans for multifamily. And the reason that those government agencies, they're not government agencies, they're private organizations, but they are backed by government organizations. A mortgage that's basically backed by the government. It's not given by the government, but it's basically insured by the government. Same thing with Fannie, Freddie, and Ginnie. These are massive loans only for multifamily properties. I cannot get a Fannie Mae loan for a retail center, and I cannot get a Freddie for a retail or industrial or office. I can only get those for multifamily. And the reason those are government backed is because the government want to incentivize more multifamily housing being built and more multifamily properties being owned by investors, because that's the most affordable form of housing for the population. Apartments are cheaper than single family homes. It's that simple. So the more apartments there are, the more affordable housing out there. And I know what everybody's thinking, apartments are not so affordable anymore, but in reality, still cheaper than a single family home, and it's still more affordable in, let's say, 85% of the country. So don't look at New York City, LA, Miami, or Austin. Look at, if you'll go out to Tyler, Texas, if you'll go out to Waco, Texas, if you'll go to El Paso, if you'll go to Oklahoma City, you'll go to Boise, Idaho, you'll find that apartments are considerably more affordable than single family housing. So that's why the government want to incentivize that, because otherwise there's going to be a lot of people on the streets, and they don't want people on the streets. And the government also doesn't want to be in the business of building those projects and maintaining those projects and managing those projects. They'd much rather have investors do that, which is why, by the way, you'll see a lot of tax benefits in real estate, even more specifically in residential real estate. That's also tax credit. This is the same thing. This is the government ways of incentivizing cheaper housing. So, any questions about multifamily? Okay. The next type we're going to talk about is retail. So I'm going to start on the right side, on the construction side, right? Everybody's seen a strip center, right? Those are like next to the Walmart, right? Next to the corner of every street, pretty much, you'll see a strip center where your Starbucks is a strip center. We have power centers, which is something a little bit bigger. If you go to everybody's local, so the Stonebriar Mall, if you look right outside the Stonebriar Mall, you'll see those big retail centers where they have Best Buy and Party City and so on, and TJ Maxx all together in a very big shopping center. Those are power centers. We have outlet malls, which is basically your Allen outlets, your Kaufman outlets, and so on. Malls, which is a dying breed. Again, we're locals, so we think Stonebriar Mall, Galleria Mall, those are very busy malls. But think the Vista something, the mall in Louisville over there, that one has been dead for a decade, at least. People don't go to malls as they used to in the 90s. So malls are really a dying breed. And if you're interested, you can Google that a little bit, and you can see how all across the country there is entrepreneurs that are coming in and they reuse malls as something else. I've seen them reuse them as apartments. I've seen them reuse them as office. I've seen them reuse them as other types of usages, because the mall as it used to be, and the peak of malls was somewhere in the 90s, it's no longer there. And then we have big box retail. What is big box retail? Costco is big box retail. Walmart, the Best Buy that is on its own, the, I don't know, the Texas Roadhouse, the big restaurant that's just standalone retail. Those are all big box retail. Usually it's a larger format, and usually it's a single tenant. Now, we can also look at retail from the perspective of what kind of usage. And the reason it's important is because, unlike most of the other types of real estate we'll deal with, zoning laws kick in a lot harder and matter a lot more in the retail world. So if I have a building that was built for a bank, the chances that I can pull the bank out and put something else in there that is not a bank, not very high. Why? Because if you look at any bank that you've ever walked into, it's built around one big room, which is the safe. If you look at a daycare, they're built in a very specific way. The building will have multiple rooms. They will have a bathroom next to every room. The bathroom is going to have toilets that maybe reach just halfway to your knee, and it's not usable by adults by any way, shape, or form. It needs a yard most of the time. They'll have a yard where the kids can go outside and play. So really, all those things are retail, but they're all have their own little special way to build the structure in order to fit the usage. Gas station. Can you turn a gas station into something else? Not easily. Grocery stores. They can be in the middle of a strip center, or something like that, but they're 150,000 square foot. It's not like I can get an Albertsons move out or Kroger move out and put your local barber shop in there. Looking at the usage, not only from the zoning perspective, but also from the specific way a building has to be built in order to support the usage. Auto shops are usually concentrated in certain areas in a city because the city wants those limited into a certain zone based on the zoning and planning that they have. Bars and restaurant. Unlike Houston, which is one wild west with no zoning, most of the Texas cities will have zonings and regulations. So you won't find yourself with a liquor store next to a elementary school. The city has reasons for all those things. Knowing the usage that you can use the certain building for is super critical in retail, not only from the perspective of some of it has to be custom made or specialized for, but also from the zoning perspective. We talked about, we have a few listing of retail to lease, and the very first question when somebody is calling to ask about the space is, oh, okay, tell me a little bit about what kind of business you want to put in there. What kind of business do you plan on using the space for? And for example, the Garland properties that we have listed right now is about 300 feet away from an elementary school. So if somebody calls and say, hey, I want to put a liquor store in there, I want to put a bar in there, yeah, it's probably not going to work. You won't be able to get a certificate of occupancy from the city because they're not going to allow that usage. So you always want to ask for usage. You always want to figure out what they're trying to put in there. If earlier we talked about multifamily and said residential, people are going to live in this thing. Retail is I'm going to put my business in there before I go to industrial. Any questions about retail? Okay, awesome. Industrial is another asset class within commercial, and we use it again just like retail. We're going to look at usage and we're going to look at the construction type. The construction type, I can have metal buildings, I can have concrete tilt up. The tilt up is a really cool thing that came up in the last, I don't know, decade or so, is where they pre-manufacture the walls somewhere else and they bring the walls already built. So when that happens, all they have to do is they build a metal structure like a skeleton, and then they take the walls and they tilt them up. That's why it's called tilt up. And it's really cool because it saves a ton of time in the construction. It creates a much more durable building because you have concrete, and these are like solid 10, 12 inches of thickness of those walls, right? We're not talking about a 3-inch tiny little wall. These are massive walls, which means more durable business, building, more isolated, insulated, and so on. Concrete tilt up. Cinder blocks, you'll see those a lot in the older buildings. You'll find them in, I don't know, buildings from the 50s. You'll find those in the old downtowns. So if you look at old downtowns like downtown Plano, downtown Frisco, downtown, I don't know, Greenville, you'll see a lot of cinder block buildings. And then, of course, there's wood construction, and that's everywhere. If I wanted to have a manufacturing facility, I could have just stuck it in a big old barn. They don't do that anymore. Nobody construct a brand new industrial building from wood. but you'll find those in the older stuff. And then on the usage types, that's where things get very interesting in industrial. Cold storage is a very unique type, right? Who needs cold storage, right? So everything that has to do with produce, for example, everything that has to do with medicine. So there's a lot of things that require refrigerated environment, and there are literally hundreds of thousands square foot warehouses where it's just one giant refrigerator. Every grocery store organization needs those. There's a lot of distribution centers that are refrigerated and so on. Cold storage is a very unique type. Distribution centers, these are your, think Amazon. So the way Amazon is able to, I'm sorry, deliver an item you order right now online and will be outside of your door within 2 days is because they have what's called distribution centers. They have locations where they keep a little bit of the merchandise in every one of those distribution centers across all of the country. And that way they make sure that merchandise is within 2 days of delivery from you. Because if I had to bring something all the way from Alaska to Dallas, there's no way I can do it in 2 days. But if I stage it in Oklahoma or I stage it in Kansas, it's no more than 2 days away from me. Because I get the order, it can get picked up within an hour, put on an airplane tonight, be in the Dallas airport tomorrow morning, and delivered to my door by 3 p.m. the next day. So distribution centers are very important, but it's not just Amazon. Think JCPenney, think Macy's, think Walmart. So if JCPenney or Macy's orders 100,000 shirts from China, and now they need to make sure they are distributed across all of the country, they will all come on a boat and land in, let's say, Houston, or they'll land in New Jersey. And then from that point, they will go to the different distribution centers. We'll send 2 truckloads to the distribution center in Atlanta, and 2 truckloads to the distribution center in North Dakota, and 2 truckloads to the one in Mississippi, and 2 truckloads in Arizona. And then from there, it gets distributed out to the 1,200 stores that JCPenney has across the country. Distribution centers are basically a middleman, right? It's a point between where I'm bringing the merchandise and where I'm going to send it to the either final consumer or my business endpoint. For example, for the retailer, it will be the retailer store. Warehouses is where I store my stuff. So if I'm Sony and I build PlayStations, so I basically, let's say I built 2 million PlayStation 5 last year. That's great. And they're going to get distributed to all the retailers, to Walmart and Best Buy and GameStop and so on. But when I created those 2 million PlayStation devices, I also have ordered and I want to store parts to be able to fix 500,000 of those in next year. So now I have extras from my materials, extra from my parts, extras from the cables, extras from the chargers, extra for the controllers, extra for everything. So my warehouse is where I store things that I don't necessarily need to distribute tomorrow. Warehouses are usually going to be bigger than a distribution center. And then let me stop my sharing real quick and I'll share, let's see, just share a Google Map picture. Let's go to, anybody knows where Saginaw, Texas is?
Yeah.
Saginaw is in the northwest side of Fort Worth. I didn't say Texas, so it took me somewhere. So, there it is. So that's Fort Worth. Saginaw sits over here. Now take a look at this area. You see all those boxes, right? Those white boxes are warehouses and distribution centers. This one is an Amazon one. Do you see those little black dots down here?
Yes.
Those are cars. This is an 18-wheeler. Just to give you proportions of how humongous this thing is, right? I'm going to put you here in that corner. So you'll see that when you stand next to this building, you do not see the end of it. And here's the cool part about this. This was the Amazon, right? It's not the biggest beast in the area. So the warehouses are literally millions of square foot. And now you have just an entire area of these things. That's why I picked Saginaw, because they have a very big, good area of distribution centers and warehouses. But you also have that in West Dallas. There's Fort Worth, there's Dallas, and it's easy to spot them. You see the big white space? Very easy to spot where we put all of our distributions and warehouses. Look, just a ton of white roofs. This is all distributions and warehouses. Now, again, can I use a distribution center to be my warehouse? Of course. And can I use a warehouse to be distribution center? Absolutely. But I'm just giving you the general understanding for the term versus what people actually use a building. Back to our, yep. The next type is flex, and I'm going to jump in and say self-storage here at the same time. So let's start with self-storage for a second. Self-storage is like a bastard child between multifamily and industrial. When you think about it, I have an area that has 300, 400 units, and they're all individually rented to a different person. That's self-storage, right? Each one of them is going to be like 50 square foot or 25 square foot or 100 square foot, because it's usually 5 by 10, 10 by 10, 10 by 15, and so on. Self-storage is technically industrial, but behaves a lot like multifamily, because I got to deal with 200-300 different tenants, and they all rent their own individual unit. Flex is the bigger brother of self-storage. So if so far we talked about distribution centers and warehouses as big buildings, then flex is maybe a 10,000 square foot building, a 15,000 square foot building, a 20,000 square foot building, but it is split to smaller spaces, maybe 1,500 square foot, 1,200 square foot, 2,000 square foot. Each one of those locations, each one of those suites, basically, would have its own entrance, and it will usually have a roll-up door. And not necessarily, but normally that you'll find a roll-up door either at the front or at the back. And those things, I want you to think of those. It's a great asset class because the tenant profile is usually two different tenant profiles, for the most part. One is the blue collar companies that are one step higher than one man in a van. So if I tell you landscaper, the first thought is that one guy that has a little trailer in the back of his truck that has one mower and some tools on. But if you take it one step higher than that guy, then usually it's a company that has 3, 4, 5 crews. And they have 3, 4, 5 of those trailers, or 3 or 4 or 5 vans. Same thing with plumbers. You have one guy in a van, or you can have a company that has 3, 4 vans, 5 vans, 10 vans. Same thing with electricians, same thing with roofers, same thing with insulation guys, duct cleaning guys, and so on. These guys, these companies that are just a step above the one man in a van, that's what they need. They don't need a 15,000 square foot warehouse. They just need a place where they can have a small office for accounts payable and maybe a receptionist and an office for the big boss, right? And they need a warehouse area where they can have their supplies and materials, and sometimes they park their vehicles in there and so on. When they outgrow the one man in a van mode, then they need a small space, but they don't need a huge space. They need 1,200 square foot, 1,500 square foot, 2,000 square foot. So that's a flex building. That's the best spot for these guys. Can they find a 2,000-3,000 square foot standalone building? Yes, those things exist. But a flex would be a better solution for them, because what's great about those flex buildings is that if I took a 2,000 square foot and now I'm growing even more, and the next door space is vacant, I can take over that next door space, and now I have a double suite. Or even if I take a suite that is 3 or 4 down the building from me, I can still run everything from one location and just use the other space because it's 3 doors down from me. I don't have to have 2 locations in 2 parts of town. So Flex is a great asset class for this tenant profile. The other tenant profile we see in the Flex building is ecom. So all the ecom companies that start in the spare bedroom or in the garage, and they're getting a little bit more success and they're running out of elbow room in that spare bedroom, they need something bigger, but they don't jump into the 10,000 square foot. So again, they need a 1,200 square foot, they need a 1,500 square foot space. And that's, again, takes us back to Flex. So a Flex is a very interesting asset class. It's pretty much recession proof because of those two tenant profile. And the leases are also very attractive because the leases on a Flex space would be about 2 year lease. Self storage is month to month. Residential, like multifamily, is 6 to 12 months leases. Everything else in commercial is usually longer leases. The next one is R&D or bio. Those are usually the same kind of building as distribution. They'll be 10 to 20,000 square foot. But what makes them different is they need different facilities. So if a distribution center is just, let's say, 4 walls and a bathroom, in a B or a bio company, I'll need bigger AC, or I'll need a electrostatic resistant carpet, or I'll need some kind of specialty equipment that can facilitate the technological needs of the company. So the building physically is the same, but it requires different kind of infrastructure, more advanced infrastructure to support the needs of the company. Manufacturing is basically somewhere between distribution and warehouse. It's going to be dramatically different based on the needs of the manufacturer. Sometimes it'll just be a metal building because they're manufacturing some concrete stuff or metal, fabricating metal, or some plastic molds. And sometimes it'll be a higher, more high tech kind of building because they're manufacturing electronics. Either way, it's part of the usages of industrial. Data centers is a very cool type of industrial owned by tech companies, and definitely has a lot of technological infrastructure, very specific infrastructure. Cooling is super important in data centers. They all have floating floors because in a data center, there's a ton of cables running from everywhere to everywhere. The advancement of AI is something that took data centers to the next level in the last year alone, because AI requires massive amount of computing power, which means they need a lot more computers, they need a lot more space, they need way bigger, way more massive data centers, and they need way more cooling abilities. So a data center that's been operational for, let's say, Amazon for the last 10 years is not going to be able to support ChatGPT, right? It requires the requirements from AI are different and more advanced, which is why if you'll do a little bit of reading on that, you'll see that there is billions of dollars invested these days in building very specific structures for the AI data centers. And then we talked about self-storage. Any other questions about industrial? Awesome. Office is one of the most beat up asset classes in commercial these days. And COVID started that whole mess because a lot of people started working from home, and then everybody got excited because it was working great. And now companies realize that working from home is not what it's all made up to be. So a lot of them are now pushing to get everybody back into the office. But if you got used to working from home, going back to the office is not something you want to do most of the time. And an interesting situation that happened in the last few years is if I was working in an office in New York City, or I was working in an office in San Diego, and since COVID, I've been working from home and it's been 2, 3 years, a lot of these people just moved. and then just bought a house in Dallas, Texas, or Boise, Idaho, or just moved out to the country 3 hours away from the office. And now these people are getting told you need to get back to the office. But sometimes it's not that easy because they're not even in the same state. It's going to be a very interesting thing to see what happens with the office asset class in the next few years. But that's outside of the conversation today. What we're talking about is how does office look like? So we can look at location, and usually the location is either downtown or suburban, because it's if you're looking at downtown Dallas or downtown anywhere, most of those buildings, office buildings, will be filled with law firms and financial firms and government agencies and so on. While in the suburban area, you'll find more of the smaller companies, you'll find your medical, you'll find your insurance, the other non-financial, non-legal kind of activity. So in terms of usage, you have a traditional office, you have executive office, medical office, creative office. This is where in the last 2 years we've heard about WeWork and stuff like that. This is our office. Instead of me going out there and finding an office space that fits my needs, and then I'm going to have to furnish it, and then I'm going to have to get my own utilities, and I'm going to get my own internet and get my own electricity and so on, there's a building that's already got everything set up. All I had to do is bring my chair and a table and put it in the room, and all utilities are paid for, and all the internet is paid for, and there is a conference room that I can get access to, and there is a kitchen area with coffee machines and printers and so on. So I have all that environment set up for me for one small payment, and I don't have to worry about all that. This is why they always compare the WeWork, the shared office kind of environment, to hotels. Because when I go to a hotel, I don't have to worry about anything. I just pay my rate, and I got the furniture, the cable, the internet, and so on built in. So that's why those got very popular recently, and I think that's probably the vision going forward with most of the office usage for the small business owners. Now, if I had to have a group of, I don't know, 40, 50 developers in my office, then it does not make sense to go to one of those WeWork environment. I will need to get my own office space and my own everything. So you'll hear in the news a lot, like I said earlier, that they have huge vacancies these days. You'll hear in the news that they have a lot of debt coming due, and a lot of them are going to be underwater and so on. That's coming. How it's going to play out, it's going to be interesting. What I can tell you is that people will always find a way to be creative and reuse it for different purposes. So there's a lot of conversations these days about converting downtown office space into apartments, for example. And there is a technical limitation for that, like engineering structural. If you want to put apartments in an office building, you're going to have to drill through the plates between the buildings so you can pass all that extra electricity, all that extra plumbing, all that extra things that it was not designed for. And then architecturally wise, in order to maintain the building integrity, there are only certain types of building construction wise that can be converted. So while everybody thought this is going to be the big wave, it's not, because there's a very small percentage of office buildings out there that can be converted, assuming somebody would want to convert them. Any questions about office? One word or mention about the medical office. Medical offices are unique, and it's like its own subcategory. A lot of people will talk about medical and will not consider it part of office, but it is office. Medical can have its own subcategories as well, right? You have your dentist office that might sit inside of a retail strip, and you have a dentist office that its own building. There are medical buildings that have multiple medical tenants in them. So I'm sure you've all went into a building that had a dentist and an orthodontist and a dental surgeon and and so on, or you went into a building that they had a family doctor and an imaging and an orthopedic and so on. So there's a difference between an office or any other commercial building that has a medical suite in it versus a medical building built from multiple medical suites and medical offices inside the building. Zoning comes into play that, but normally wherever you can put a medical office, you can put any other office. And the right mix of tenant can make or break a medical building. So you don't want three dentists in the same building. They're going to cannibalize on each other. It's very similar to a retail center. You don't want three pizza places in one retail center. They're going to cannibalize on each other. So that's office. Any question before we move on? Land. Land comes in all types, shapes, sizes, locations, rural, and so on. It gets an honorable mention here because there's a lot of commercial or non-commercial that can turn into commercial, and that's by changing the usage of commercial. So just because land right now is agriculture or residential doesn't mean I cannot go and do a zone change and put industrial on it. So that's why all types of lands are mentioned here with an honorary mentions of outside storage. This is something that is coming up into consciousness and into the news recently in the last year or so. A lot of companies need space to store big stuff. So if I'm a trucking company, I need a lot where I can put all my trailers, and it needs to be secured and fenced and so on. But what I'm renting or leasing is just a piece of dirt. So outside storage is something that came into consideration. Think FedEx. If I'm FedEx, I have a buttload of trucks, right? I have a lot of other machineries. I have my own airplanes. I have my own boxes and my own containers and so on. So I need a place to store a lot of things that is not inside a building. So outside storage is something that is getting traction in with a lot of investors these days. Mobile home parks and RV parks are also mentioned here because, again, in both cases, what I own is a piece of land. The only improvement I have on that land is basically just some concrete, some electricity meters, some water and sewer infrastructure, maybe a septic tank, but all I really own is that piece of land. So mobile home parks and RV parks are mentioned over here as well. Questions about land. What we call specialty is other stuff. Anything that is not residential and is not covered by the big stuff we talked about so far, it's going to fall under specialty. RV parks we talked about a second ago, telecom and infrastructure. Think cell towers. Think cable generator. The cable infrastructure we have needs power. Inside the city, inside your neighborhood, sometimes you will see a fenced area that has a cell tower or has just one big generator that keeps things running. All these things might sit in a building, might sit in its own little warehouse, might sit just as, like I said, a tower, right? All these things are owned by somebody, and it's not always by the company that owns the infrastructure. So T-Mobile leases the land from the landlord to put the tower on. Same does AT&T and so on. A soccer field. How would you categorize a soccer field? It's owned by somebody. Not all soccer fields are owned by the city. Football fields, baseball, and so on. Batting cages. These are all a stadium. The American Airlines Stadium, right? How would you characterize that? It is commercial building, but it's not one of the other things that we looked at, right? So it goes into specialty. Marinas, golf courses, schools, because not every school is owned by the city, churches, garage, those parking garages, even those parking lots. When you go to see a concert or you go to a Cowboys game, there's a lot of lots around the stadium in the area that are not owned by Jerry Jones. These are all private lots, and they charge the crap out of you to park over there. These are all kind of commercial. Car washes, airport. There's a million other things that are not listed here that fall into the quote unquote other category because there's nothing other than there. More stuff, we have hospitality, hotels, motels, casinos, and then we have mixed use. Mixed use is also a different kind of animals, right? You can find shops at Legacy or Legacy West. You have a whole apartment building on top, and then on the bottom you have Louis Vuitton and Tiffany's. So retail on the bottom, industrial on top, not industrial, I'm sorry, residential on top. So mixed is usually projects where 99 times out of 100 it'll be retail and residential. Any questions so far before we go to the common characteristics? So I mentioned earlier that all those kind of different types of commercial real estate can also be characterized by other ways, right? For example, size. In multifamily or self-storage, we're counting units or doors, under 75 units or 75 to 200 doors, or 200 plus units, and so on. In the retail world, or the retail industrial office, it's measured by square footage. In land, it's measured by acres. And the reason I mention those is because you will sometimes see categories either in a website or in the way a broker identifies themselves. I only work with 75 and under, or I only work with 200 plus units. And more importantly, this can help you guys narrow down the group of owners you want to work with. Because the people that owns multifamily under 75 units are not the same kind of people that own 200 plus units. It's two different types of people. And you're dealing with them differently, you market to them differently, you'll find them in different locations and so on. Same thing with, we're looking at by market. Am I dealing with major market, secondary market, tertiary markets? We're talking about Texas, the major market. We have 4 of them, right? Dallas, Austin, San Antonio, and Houston. Looking at secondary market, you have a few big cities out there: Amarillo, Lubbock, El Paso, Tyler, Waco, and Corpus Christi, and Bryan College Station. Those are 300, let's say 250 plus, 200 plus thousand people in a small little metro area. And then tertiary is like Texarkana, Texas, or Mount Pleasant, Texas, or close to our home, Greenville, Texas. Denison, Sherman is going to be tertiary. It's not going to be secondary even. It's not in the major. It's not 200 plus thousand people. It's like a 50,000 people's town, 20,000 people town, 3,000 people town. We have those too, right? Those are tertiary. And then we can also limit by value. Am I looking at properties under $1 million, between $1 and $10 million? We're looking at $100 million plus properties. And again, the reason we categorize these things, we slice and dice by those parameters, is because it's a different profile for the buyer, it's a different profile for the seller, it's a different profile for the tenant, and it's a different profile for the landlord. And it's easy to think that we're in the business of buildings because that's what we talk about all day long, but we're not. We're in the business of people. Because if we don't talk to the owner, the buyer, the seller, the landlord, or the tenant, then we're not in business. So that's really what it's important to talk about these things and understand these things, because we're not. Let's say I want to say that I'm going to specialize in industrial. The brokers that specialize in on cold storage, there's no point for me, if I specialize in cold storage, to talk to anybody at JCPenney, because JCPenney does not need cold storage. But Lion Foods, Walmart, Target, Fiesta, anybody that is dealing with food has to talk to me. So that's really where if I can slice and dice and find my niche, then I'll know who to talk to, what am I talking to about, who are my potential buyers, potential sellers, who are the decision makers. Because again, I'm not talking to Sam Walton if I want to talk to Walmart. I got to find who's dealing with real estate in Walmart. And I guarantee you, within the real estate department in Walmart, there are different people that handle stores, Sam's Club, warehouses, and cold storage. Different people. Why? Because Walmart has 200 cold storage facilities and 3,000 stores. So one person cannot handle all of that. Okay. Any questions? That's what I wanted to cover today. Nobody? No questions? Everything's clear? Everything's good?